Get ready to dive into Uber's latest financial report and stock performance as we compare it to the likes of Grab, Didi, and Lyft. We'll explore which segments of Uber have been driving more profits in 2022, and we will answer the question on everyone's mind: is investing in Uber technologies worth it? So sit back, relax, and let's take a ride through the world of ride sharing. Looks like Uber drivers were busy bees in 2022, completing a whopping 7.6 billion trips. That's a 20.6% increase from the previous year and even beats their 2019 record. It's safe to say that Uber's been on a wild ride since it was founded in San Francisco back in 2009. And now they're connecting drivers with passengers in over 10,000 cities worldwide, while also delivering your favorite foods and more. With all that hustle and bustle, it's no wonder Uber drivers need to keep their wheels rolling. Uber has faced some controversy and regulatory challenges in several countries due to concerns about the safety of its drivers and its passengers, as well as an impact on traditional taxi and transportation services. The company has implemented various safety measures and regulations to address these concerns. Despite these challenges, Uber has grown to become one of the largest transportation and technology companies in the world, with a market capitalization of over $100 billion as of early 2023. In the last year, Uber was trading at 35, then it went down to about 20, and now is back up to 34. It's been a wild ride to get back just where it started. Trading at 51.2% below analysts' estimate of its fair value, and earnings are forecast to grow by an average of 82.7% for the next 3 years. That's what the analysts say. Just to compare its stock with its main competitors, Didi in the past year has gone from 4 down to 1.6 and back up to 4. Let's hope its drivers find a more direct route. Some of Uber's competitors have remained flat during the past year, although Lyft has fallen from about 38 to 10. For most of the past year, Grab has traded in the range of $3. It's been up to $4 and below $3, but mostly where it is today, which is $3.10. Now let's compare the largest ride-sharing companies in the world with similar business models and offerings. The largest competitor of Uber is Didi. Uber has a larger global market share than Didi, with operations in more than 10,000 cities worldwide. As of early 2022, Uber was estimated to have a global market share of around 70%, while Didi's market share was estimated to be around 10%. Didi is the dominant ride-sharing company in China, where it reportedly has a market share of more than 90%. Uber's market cap is around $69.35 billion, while Didi is almost $22 billion. Another big player in the market is Lyft, with a market cap of $4.18 billion. Uber is global, while Lyft only operates in North America. Uber dominates ride-sharing, taking in roughly 70% of US riders and spending and leaving Lyft with the rest. Grab, with a market cap of $13.4 billion, is at the top of the ride-sharing industry players. Grab is the biggest ride-sharing player in Southeast Asia. So far, among all the parameters, Uber remains the biggest player in the ride-sharing industry worldwide. As this program is dedicated to Uber financial data, let's continue. In the fourth quarter of 2022, Uber's gross bookings grew by 19% year-on-year to $30.7 billion, with 2.1 billion trips completed, a new quarterly high. Revenue grew 49% year-on-year to $8.6 billion, and net income was $595 million, including a net benefit of $756 million. Adjusted EBITDA was $665 million, and free cash flow was negative $303 million. According to forecasts, Uber is expected to become profitable within the next 3 years, with faster growth than the savings rate. The company's revenue is also expected to grow faster than the US market. To sum up, investors should consider Uber's financial performance, revenue growth, and profitability, which is positive and will remain such according to analyst data. The competitive landscape is also very positive. Investors should consider Uber's position in the ride-sharing and food delivery industries and how it compares to other major players such as Lyft, Grab, Didi, and others. Let's see the data on a detailed breakdown of Uber's profits by segment. There are several: Uber Mobility or ride sharing, Uber Eats or delivery, and Uber Freight. By the end of 2022, Uber Delivery, former Eats, revenue was $10.9 billion, which is about 25% higher than in 2021. It has increased its revenue rapidly over the past 2 years. Almost every major food delivery service saw its gross merchandise volume increase by over 100% in 2020, and the trend is still ongoing. In 2022, Uber Eats is available in around 10,000 cities worldwide, compared to 6,000 in 2021. In 2022, Uber Eats is partnering with around 825,000 restaurants worldwide. However, this number has decreased from almost 900,000 in 2021. In this chart, you can see Uber Eats market share versus US competitors. You can see here the trend is also positive. So far, the biggest segment is Uber Mobility. Compared to 2021, it became the key driver of revenue in 2022, with annual revenue of $14 billion. The drivers completed 7.6 billion trips in 2022, a 20.6% increase year on year. Another segment which is rapidly growing is Uber Freight. Its revenue has grown from $2.1 billion in 2021 to $6.9 billion in 2022. It also became a key driver of revenue in 2022 after suffering heavily from lockdowns in 2020 and 2021. In terms of regions, the US and Canada are still responsible for the majority of Uber's revenue, with $19.4 billion of the $31.8 billion made in 2022 coming from those two countries. Latin American countries generated $1.9 billion, and Europe and the Middle East region $6.9 billion. APAC countries $3.4 billion in 2022. Uber may have faced some bumps in the road, but you can't keep a good ride-hailing and food delivery company down. In 2023, Uber is hitting the gas on efficiency by focusing on its core businesses and dumping any unnecessary baggage. And they're not just taking care of business. Uber is also putting the pedal to the metal on sustainable initiatives, zipping toward a greener future. This company is revved up and ready to roll. With a fresh new focus and an unstoppable drive to succeed, Uber is definitely a company to keep your eye on in 2023. So buckle up, let's ride into the future with Uber. And you can always keep an eye on Uber and other companies' stocks, and even invest starting from $1 US directly from your Dukascopy bank account. Don't have one yet? No problem. Simply scan the QR code on the screen or check the link in the description. Registration will take just a couple of minutes. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you, it cannot take care of itself.